There are times when your best trade is no trade, and that's currently the environment that we're in right now. We're starting to see a disconnect between the fundamentals and the technicals, and I'm going to get into that in just a second. The market really isn't going anywhere fast, so I'm going to take a look at my last two picks. CAVA, that pick came out here in Sunday's video, and you can see the stock barely moved. It's starting to get off the deck a little bit today, but the market really didn't give you anything from the short side, so you shouldn't have even been trading that side. We've seen nice rallies the last 2 days. PLTR was the long that I gave you. It's kind of dogged around, to be quite honest with you. It has not been able to break out through this resistance level. I still like the long, but it has not participated with the market rally that we've seen the last couple of days. So with regards to the market, let's go into the 5-minute chart. Since Sunday, we saw a little bit of a drop Monday morning and then a steady but choppy trading channel higher. Yesterday, this is nice, steady price action in here. That's a sign that buyers are definitely engaged. This morning, we had a very weak ADP number. We had, on a fundamental basis, we have weakness starting to surface, and ADP showed that 37,000 new jobs were created in the private sector during the month of May. That was much lower than the 111,000 that were expected. Now, to go back one day earlier, JOLTS actually came out better than expected, and that showed that job openings were a little bit better than the market had anticipated. So mixed signals on the job front. We have initial jobless claims coming out tomorrow. It was at 240,000 last week, and that is a uptick. So higher initial jobless claims. So we're going to be watching that number tomorrow before the open. Maybe that'll give us some insight into Friday's jobs report, but that is the granddaddy of them all. Everybody watches the jobs report. So we're going to be seeing if jobs remain strong. Even with other economic data points starting to falter, the job scene has remained quite robust, and that's what's keeping the market afloat. So this morning, after the open, ISM Services was reported. The service sector accounts for 80% of our economic activity, so I tend to weigh that fairly heavily. It dropped from 52 to 49.9. 49.9 is in contraction territory. So the fundamentals are starting to deteriorate, and that's not something new. This has actually been going on for about the last year on a global basis. Sooner or later, that weakness was going to filter into U.S. economic conditions. So we're starting to see those signs right now. Are we going to continue to see more of them? I believe so. We're also seeing the manufacturing numbers fall off. Well, that is something that I had mentioned earlier. A lot of companies produced lots of goods ahead of the tariff news. So there was an influx of imports ahead of those tariffs. And now we're going to start to see a production slowdown. China's numbers were very weak, which, by the way, we've also had some fundamental news that could have pushed the market higher, and that would have come in the form of trade deals. We're not seeing any trade deals. The market's going to get nervous. It's going to get anxious. It wants to see those trade deals. China is digging in its heels. Trump is accusing them of reneging on some of the agreement that they've already had in place. So we'll see how that plays out. He very much wants to talk to Xi. Xi's not that interested right now. At least those are the headlines. We're also hearing similar from Japan. Japan's Prime Minister said that their current situation is worse than Greece was in 2009. That is saying a whole lot. So they are not in a hurry to sign any trade deal because they know that it's going to have a devastating impact on their economic activity, and they are going to take their time. They've already said, we are not going to be pressured into making a decision just because of a deadline. The big, beautiful bill, that's also hitting some resistance. We heard from Elon Musk yesterday that he feels that there's still too much pork in the bill, and we've got some Republicans that are digging in their heels. Will a big, beautiful bill get passed? Not in its current form. So that tells me that there's going to be some negotiation. They want to try and get this bill out by July 4th. Will they be able to do it? I don't know. There's going to be a lot of back and forth on this one, and it is not just going to be a easy grand slam where it's just going to get done and get passed. There's going to be some negotiating. So the market, as you can see right now, has been able to stay in this very tight trading range. So this morning, it deflected the weak ADP report, it deflected the weak ISM report, and that's a sign that it wants to go higher. So from a technical perspective, there are some positives. Fundamental perspective, we're seeing weakness globally, starting to make its way into the US, but nothing devastating right now. So that part of the equation is tenuous, but the market's in wait and see mode on the fundamentals. We'll get big news on Friday, but technically, there are some positives, and we had this big breakout right in here on the tariff news, and then you can see how breakouts always get tested, and I had mentioned this in my previous videos. What do we want to see? What don't we want to see? Well, bears wanted to see red candle, red candle, red candle right through this major support level. That would be a sign that this last leg of the rally was all mechanical. It was short covering. We didn't see that. What bulls wanted to see is exactly what happened. A test of the major moving averages and then flying off of that support level. That would be a sign that buyers are engaged and that they see this as a buying opportunity. That's exactly what happened. But you can see yesterday we poked through this horizontal resistance at the May 19th high and we closed above it. And we're still above it even after bad news. So this upward impetus is still in the marketplace. So how would I trade this? Well, there are going to be times when you have to lay low and you have to keep your trading count and your trading size to a minimum. I equate this to a professional blackjack trader who counts cards. He does not make the same bets all the time. He waits for his odds to favor him. So he'll watch many, many hands go past, and when his odds are high, that's when he steps up to the plate. That's when he starts to place big bets. Right now, we don't have those odds. We don't have strong directional movement, and the fundamental news is disconnecting from what we're seeing technically. That tells me to be cautious. So I'm not going to give you two trades. I just want to give you an update of where I'm at. I think that cash is king right now. Stay flexible. Let's see how all this news pans out, and then we'll get a definitive move one way or the other on heavy volume. So we're biding our time right now, and I know that that's not what a lot of traders want to hear, but our job is not to trade. Our job is to make money, and we make money when all of the odds favor us. Right now, the odds are fairly low. It is difficult to find really good bearish trades because the market has been in rally mode. So on the short side, you have to be very, very selective and very careful. On the long side, your best opportunity is always going to come off of some type of intraday market dip where the market finds support, and during that dip, you're able to evaluate stocks that have relative strength and that have been able to tread water while the market pulls back. As soon as that market support is established, the stock is going to move higher. That's the setup that I would encourage you to look for. I'll try and do an update when I see something of interest, and perhaps that will come Friday after the jobs report. Until then, keep your trading very light. We'll see you then. Thank you.
Thank you for watching this YouTube video. I'm Pete Stolzers, and I'm going to keep the trade ideas coming along with lots of education. So make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.